Good evening. This is Ken Long from Tortoise Capital Management. It's the evening of October 1st. We'll take a quick look at the market health check condition. And what we have is a potential turning point in the market. We've gone from overbought to oversold on Williams percent R10. And you can see the move from highest high at 108 down to a test of about 103. Having crashed through the support at 104 and through the 20-day moving average. We can see that we're still in bull quiet, but volatility is starting to creep up after a low about 7 days ago, which coincided with the swing high. And we see for the first time in really since in about 3 months that minus DI has crossed over plus DI. And that could be a significant indicator for a change in intermediate market condition. We looked at some price support levels at 104, which was vicinity of the 20-day moving average, at 102 and 100. And we saw 104 violated today pretty strongly. Tomorrow I expect to test a 102 at some point. If it fails there, it tests at, looks like just right around 100 or 99.5. But I would classify that as being in the red zone, because then we'd have 4 days in a row of powerful selling, which negates much of the September gains. And then it's off to the races below. We'll take a quick look at the daily summary chart. You can see we're still bull quiet. And today on the 10-day index, we closed at minus 27, meaning that it closed more than a quarter below its 10-day trading range. So if you take the 10-day trading range and take a quarter of that, that's how far it broke through to the bottom side. And you can see that reflected here in the 10-day index with that very low number. You can see the max pains, and we've got some of our usual suspects in there. Alcoa, DuPont, you see some U.S. real estates in here. The GDX is the gold miners. Actually, all 4 of those right there are U.S. real estates in the ETFs. We've got a bunch of signals firing in the overreaction system. We just closed a trade earlier this week, favorable trade on IWM, so that's of interest. And you can see here that basically all of the indexes minus Latin America are firing on the channeling system. So the whole market right now is in oversold conditions. Pivot has pulled all the way back to 103.89. You can see we've got double digits finally on the volatility index at 10. It still leaves us in quiet mode, but it is creeping higher. The 30-day regression line slope has crossed over its own 10-day moving average again and is just above average, and it's failing. You can see we're still in quiet zone. But again, now you can see on volatility on the ADX, the minus DI has crossed over the plus DI, and that's why for the first time really in 3 months we've had minus DI in charge. There's today's big red candle. The 3 price leaders we're going to see in a minute were today in the Dow were Walmart, McDonald's, and Disney. Perhaps a flight to quality. Their relative strength was better than the rest of the market. And now the Dow 30 and the ETF tactical report. In the red, you can see here all of the symbols in the Dow. More than half of them all broke down today from -4 and below. Every one of these, the top 10 of these max pain conditions here, all closed at 10-day lows. And you can see that they're also mostly the max pains from 10-day and 3-day. The 3 significant winners today, Disney, Walmart, and McDonald's. Almost every ETF is dramatically oversold with the exception of treasuries. You can see at 113, it looks like a flight to quality again. there's a split in the commodity areas with mixed commodities and oil doing well. DBC is one of my personal favorites right now. I really like the way it's shaping up. I've got a nice swing position working in that one. Consumer staples, you can see among the S&P spiders, made a little money today. That could also reflect a flight to quality as money managers are locking in their quarter and year-to-date gains. Everything here on the 10-day index, you can see from J.P. Morgan all the way up to Home Depot, all closed at below the oversold condition indicator. In fact, they all made 10-day lows. Travelers is really the only thing that looks extended on a 10-day basis in an overbought condition. And then in yellow, you see reflected the routine overbought between 0 and 20 on the 10-day index. So what we have is an entire market that has either moved into a buy-on-dip opportunity in a bull market, or this is the market cracking after an extraordinary historic run-up. My concern is that it's more cracking. This is 3 out of 3 days big down with the worst day coming at the end, whereas the last 3 days selling that we saw, the third day was a doji, which prompted some buying pressure. But this one looks a little more dangerous, and even if you look all the way back for 3 months, we haven't seen 3 days in a row of down selling like that lately. So when you combine that with ADX, I'm really concerned about this being an intermediate turning point. You can see on this red line right here that we made lower highs, and so now we've got the possibility for shoulder, head, shoulder, and then that takes us down to 100 pretty quickly to test the next support levels. So keep your powder dry and your risk measured and your trades calibrated. Good hunting out there. Thanks.